is a little out of the ordinary, but we wanted to get you your normal dose of the Ord Oracle. So we're going to have Tim Ord on today, and it looks like he is on during this segment. You go over to ord-oracle.com. You can check out all that Tim has to offer, his newsletter, his book. Additionally, you go to TFNN.com and go to the services tab, and there are 2 fantastic webinars from Tim Ord on there. You definitely want to check those out. Tim, how you doing?
Good. So kind of like a lot of nothing here for the last 3 days.
Definitely.
But things are developing here. I've been kind of, I got bullied a little bit too quick, and I didn't really sell out that position. But right now, over the last, actually since March 13th, we actually been basing here, and this whole thing's forming some sort of a bottom. How big a bottom, I don't know yet, but it depends on the next rally. So let's kind of look at the bigger picture. The first chart here is the American Association of Individual Investors Bull-Bear Ratio, and it's a 3-week average. So this kind of looks at the bigger picture. So it's a weekly chart, and plus it's an average of 3 weeks. So to get this low, I got a little circle down there. It's the middle of the chart, and we very seldom get down there. The last time we got down there was 2022, and that was when it was forming a major bottom. But most of the times it gets down below 0.75. You usually get close to a low. This time around, I think we got down to 0.34. Now we moved up a little bit. Market's still kind of going sideways here, but this indicator suggests we're at some sort of a multi-week low. Could have turned into a multi-month low. That's a possibility, but it's at least a multi-week low.
Okay.
So anyhow, that's still bottoming. We really haven't moved much from March 13th. We went up a little bit, came back down. So to me, this is a basing. I'll show you some other indicators to kind of prove that point. Let's see. This, I think I got the wrong. Let me check here.
Set up on your little check as well.
April 2nd. All right. So, okay. Well, anyhow, this is one chart. This is another chart. I had another chart in here. But anyhow, let's get back to the second chart. This is another weekly chart, and it's just a weekly SPY. It's all it is with a Bollinger Band on it.
Yep.
This indicator, if you ever take it back, I took it all the way back far as you can go, and the probabilities of this working is really high. Works better at bottoms than at tops, but it does when you do give it. The indicator is when you close below the lower Bollinger Band. You're usually, it's a close, not an intraday low, but a close below the lower Bollinger Band. You're usually at least a multi-week low. If a lot of times it could be a multi-month low. But I went back to 2022. I could have gone back a lot further, but you wouldn't be able to see what goes on. So, but anyhow, going into the 2022 low, it hit below the lower Bollinger Band a couple of times, and each time you got at least a multi-week rally. Matter of fact, this one here, you got a multi-month rally. The one back in October, approximately of 2023, it rallied up several months. And we're back down below it. If you look over here to the right window, you close below the lower Bollinger Band. Went to 3 times. Last 3 weeks. This week we haven't. But that's pretty unusual to do that. Normally one time you get it. But 3 times in a row. So does that mean something special? I went back to 2016, and that's basically the last time it did that, and went back up to the previous highs. So the probabilities of that doing it, that could happen, I guess, because the more the market's oversold, the more powerful the rally afterwards. So we'll see if that turns out to be true or not. But I'm thinking we just get back to the mid Bollinger Band area, which is previous times when this happened. That'd be the minimum, which is around 590 to 595. So that's what I'm thinking there. This week's low tested the March 13th low. You can kind of see it here. This is a weekly chart, so ideally you like to see this week's volume less than the March 13th volume.
Sure.
And it kind of looks, that's probably what's going to happen here. So, have we seen the bottom? Probably. But market, it's got 2 more days of trading before really to say that. But I think we're probably this week is probably the low. Then from there we start rallying. So anyhow, this is another kind of a weekly chart, which is more of an intermediate term chart, just like chart 1.
Right.
There's another weekly chart because I flipped it, the weekly charts, because the daily charts failed at my last signal, so I flipped to the weekly charts, the bigger time frames, and the weekly charts rule the daily charts rule the hourly charts. So I wanted to take a bigger view of what's going on. So anyhow, the middle window is the weekly SPX tilt ratio. So this is a ratio between the equity market and the bond market.
Yep.
And that's pretty much the whole world market. It's a huge market. So you want to see what the relationship of those two things do to each other. So if one gets out of whack compared to the other, then usually you're about due for a reversal. So I use the RSI for that. And I took all the buy or the sell signals out and just concentrated on the bullish signals, I guess you might say, which is all these red lines. So between 2021 and 2023, we didn't have any signals at all as far as the buy signal goes. So now we're starting to get 2 of them. We got one back, and it looks like probably July of 2024. That was a decent bottom, came back, looked like for a retest right here, then went up. Now we're back down there again. We're at 29.72. So this is giving a signal right now. We actually had that signal bullish last week also. So we're making a low, a high probability low. Okay. Nothing's perfect, but probably we're at a low 90% of the time. And these are the other times we got signals. We're back in 2019, picked out that low, picked out some minor lows, picked out the major low of COVID crash, and picked out the low of last year. Now we're back at it again. So it's worth, I guess, being long right here, right now. If you want to wait 2 more days to really confirm it, that's fine.
Sure.
But here's another chart, more to the same. So I flipped to the weekly VIX. VIX is kind of, if you notice, I'm kind of using extreme indicators when they push beyond their boundaries. I use that the Bollinger Bands for that. But if the Bollinger Bands get up above the upper Bollinger Band on a weekly time frame or below, the market's stretched and due for a snapback. And that's where I circled here. The Bollinger Band on the March 13th low got above the Bollinger Band at the same time when the S&Ps got below the Bollinger Band. So it's kind of a double signal. You knew you're going into a low in here. So I'll hold.
Yeah, Tim, please stay right there. Folks, we'll be right back with Tim Ord right after the break. Welcome back, everybody. You're watching the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. You can go check out his website at ord-oracle.com with the newsletter and his book there as well. Check it out. Tim, we have 2 questions, if you're able to take them. One on volume and one on the trend.
All right.
So the first one, they're asking for your take on the daily volume bars when you compare to a recent retest of the lows. They're saying volume on the retest for the SPY and the Qs was at least 10% higher, which suggests that the lows could be revisited again. That's the daily 313 and 331. If you have any insight on that.
I do, because I noticed the same thing, and I actually put it in my market letter. And so that implies that the previous low of, 3 days ago could be tested again. Now, which is a possibility. If it's going to do it, it's going to have to do it between now and Friday. Now, the reason why I say that, I think tomorrow's going to be a kind of a sideways day, and probably Friday's going to be a sideways day, or not. If it's going to be up, it's going to be up not a lot. If it's going to be down, probably not going to be down a lot. So I don't think we're actually going to test Monday's low, which is that Monday's low tested the March 13th low and did so on higher volume. And so I seen that and said, well, that opens a test of the Monday's low again. And that may be true. But again, the weeklies outrule the dailies. For instance, if the volume actually kind of is drying up this week compared to what was happening on March 13th week. So if you go to the weekly charts, the week's not over yet. We got Thursday and Friday to go yet. But if the weekly charts are lighter volume on the test. In other words, this week is lighter than the week of March 13th. On a weekly time frame, that would be bullish. Even though the daily is higher, the weekly is a lot less. So what I'm saying is, then if the weeklies test a previous low and lighter volume, then that is the low, and the dailies don't have to go back and down and test that low because the weeklies roll the dailies. Probably, did I say that makes sense at all?
Yeah, no, I think it makes sense, and I think it probably should for the individual asking. If not, of course, tell me.
Yeah. So what I'm saying is, I'm looking at the weekly volume compared to the week of the March 13th volume.
Yes, on the week.
If this week's lighter than the March 13th volume, at least 10% lighter,
right,
then that probably retest is done. Even though the daily is higher, the weeklies rule the dailies.
Absolutely, yeah.
All right. So what's the trend thing?
Yes, the trend. He was saying he was expecting a high trend reading for today to help set a bottom. Opening trend was 2.32, but per he says Obi-Wan's teachings, he's like, I usually exclude the opening value. He goes, he wants to know how you're treating essentially the opening value for trend. If he included all that criteria to bet, and he should have been long, is what he kind of adds at the end.
Well, yeah, there's null indicators work all the time. That's the reason I kind of flipped out of the trend stuff, but it still is valid here. If you look at the trend last Friday, it closed at 1.62, and the market gapped down Monday, this week, and started to rally. So I think we got enough panic to get this market going to the upside. And the 2 and 3 day trend back as of last Friday did pop into bullish territory. To me, I like to see the trend really just blow out.
Sure.
And we're not getting that here. And that's one of the reasons why I think we're not going to get a bull market this year, because we don't have enough fear, which is basically trend readings higher than 1.2, to really have this market keep on making higher highs. I think as best we can see this year is probably a test of the previous highs back in February, up in that high there. So the trend is not real bullish here. I see that, but we did have a bullish trend set up last Friday. So far, in my opinion, it's working because the market's higher than Friday's close. Not a lot of energy, but if you look at where today's trading's not over as far as volume goes, but if you look at today's volume is probably going to be a little bit higher than yesterday's volume, and you like to break higher previous highs, which is yesterday's highs, on at least equal volume. So I think today's volume is going to be at least equal to yesterday. So that keeps the short-term trend up. So now you go to the previous high of a couple of days, or be last Friday's high. Like to have today's volume higher than last Friday's high, because we tested last Friday's high, and I don't know if we'll reach that today or not. That's the reason why I don't think we're going to just keep going up right here. We don't have enough volume. But if you compare to the last 3 days volume compared to the previous 3 days down, and if you do the average, we got higher the last 3 day average 3 day volume, which are all up 3 days in a row, compared to the last 3 days down of last week, have higher volume than those 3 days down. So you can see energy starting to flip up here. Did that make any sense?
Yeah, understood entirely. But then with the opening trend, I'm assuming that's the trend at the beginning. I don't always look at the trend, but the trend at the beginning of the day. Do you have any bearing on that, or are you kind of looking how?
Actually, you do. To me, I always take the close of the trend.
I see. Okay.
It accumulates all the. A lot of times when the market opens, you got different sectors open at different times, and
understood.
And it really, you got maybe a lot of buying in one stock that's driving the trend up or down, or something like that. But basically, in my opinion, you like to see actually trend high all day long, especially during a rally. That's really good. But the trend on the close accumulates all the day's activities,
yes,
and puts it in one number, and that one number is usually pretty accurate. And today we got 0.88 right now, which is not great, but so it's not a real powerful reading. But the trend close, I'll put it this way, the trend closes work a lot better than the trend opens.
Understood.
That's relative, but trend open, to me, I really don't concern it too much. I look at it, but I don't think you got really high reliability information from it. I'll put it that way.
Certainly.
But on the trend close, you do. So because that accumulates all of the the what happened throughout the day. So
Fantastic. All right, that seems like the questions for you. So if we want to keep going.
All right. Okay. So we're looking at an intermediate term low, and we think we're going to get a bicycle on the volume statistics on the weekly time frame. As this week's volume is lighter than the March 13th volume, which I bet we'll have to take a look Friday, but I think that's probably going to be the case. So let's say this is the bottom, and so what needs to happen now? Right now, if we are looking at bottom, and the rally's going to start here, probably not this week, but probably at least next week, if as very late as week after. But the next rally is going to tell a whole lot, because once you get a bottom going, you need a sign of strength off that low. If you don't get a sign of strength, you're going to come back down again. So this one.
I know. Well, Tim, stay into the next segment. Totally fine if you're good with it.
Right.
O'Brien.
All right, welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, of course, we had a nice kind of question segment there. What are we looking at now?
Okay, so say we're making a bottom, and off of a bottom, a worthwhile bottom, you have to have a sign of strength.
Yep.
And you can do it several different ways. You can do it advanced decline. You can do it a volume surge, which will work just as fine. Ideally, you like to see them both go, because volume, that'd really be bullish. But this one I got right now, volume you can actually gauge pretty easily. You just compare to the volume going up compared to the volume going down. If you got higher volume going up than compared to volume going down in the last leg or so, it's easy to see. But this is kind of a one I developed. There's wag breast thrust indicator that started to get triggered and kind of fell to pieces. So that's not going to, probably will not get triggered. So I didn't present it here. But I got another little shorter term one. It's the 5-day average of the advanced decline. And it needs to get below 0.7, hit 0.68 on March 31st, so a couple of days ago. And now we're turning up. So to get a sign of strength, it needs to go from 0.7 to 3 in 21 days, or basically 3 weeks, 15 days of trading. So will that do it? I don't know. But this current rally needs to keep going for this indicator to get from 0.7 up to 0.3, which is, I forgot what date that was. 3 weeks from March 31st, so around April 21st area. It needs to get that. And if it does, then we had one back in December, January. I got it all the shaded areas, previous ones we had over the last couple, 3 years here. So we had one in January, so I was kind of bullish. And you get another one pretty close to the same level, that would add to the bullish situation. And will we get it? I don't know. We'll see how the rally performs going into April 21st. But if we do get it, then at worst, we're going to move sideways. And at best, we're going to move up. So that would take, my opinion, would take the scenario to the downside out of the equation. So then we're looking at the lows in this vicinity here. So then it could be developed trade, go back to the previous high, back down. So this indicator needs to click in, I guess, between now and April 21st. So that'd be the sign of strength off the bottom. And if you get two in relatively close proximity of each other, which is the last one was around January, they got triggered, then that would bode well for at least a sideways market, if not a bull market. So we'll have to wait and see. So, but that would take out, my opinion, would take out the downtrend. So that's the equity market. We're looking at a low. We're working on a rally to the upside, and come mid-April, we'll know how strong that rally will be. If it's a bull market, if it's a bear market. If it's a bull market, this indicator gets 3 or higher. And if it's a bear market, we won't come very high at all, probably 2 or 2.5 or something. So we'll see. Anyhow, that's the equity market. So I'm a bull for the next several weeks.
Fantastic.
So that's the equity market. Gold market.
Yeah.
We got about 5 minutes here.
Yeah, totally.
Really not a lot. Yeah, not a lot to say. It's doing what it's supposed to do.
Yeah.
So this is a monthly chart. Monthly charts rule the weekly charts, rule the daily charts, and all the way down. So the most important chart right now is the monthly chart. As long as this chart remains bullish, you can have some consolidations along the way, but as long as this chart remains bullish, you're in an uptrend. So we're breaking above that trend line right now around that 42, 43 area. In my opinion, that area becomes support, so that's basically your downside around 43. So in general, your downside is minimal, and your upside is quite a bit. Matter of fact, if you do a head and shoulders pattern on this thing, which I think is what it is, has an upside target of 65, which is actually above the old highs.
Totally.
Yeah, so we'll see if that happens or not. But I'll have some indicators we get close to a high, but I'm not getting any right now. This is a momentum indicator. You've seen this chart before. It just measures the up-down volume percent in GDX, so it's connected to GDX, not just the general equity gold market. And as long as this indicator stays above zero, the uptrend's intact. Last time we had a signal on this was in probably around April, and it stayed bullish all the way until October. Then you got a big down, and looks like a bottom in January of 2025, or 25. Now we've gone up again, so we're back into the bullish range. This is a 50-day average of the up-down volume, so it's kind of a longer-term indicator, but it's healthy. It's shows no sign of really letting up here, especially when it gets this high. Very seldom you go straight up, straight down. You did there back in 2022, which is kind of rare, but now we're starting to get up here, and we're staying up here. 2024, you stayed up there most, over half the year, 7 months of stocks moving higher.
Right.
And we're back up there again. We'll stay up there. I think we'll probably stay up in this region until July. May change, but there's no reason to be short this market other than minor consolidations. Yeah, there's that head and shoulders pattern I talked about. If you do the measurement from that head to that neckline, you get a 65. So will it be reached? Don't know. Really don't care, because some of these momentum indicators were turned down before that happens. So, but they're not. So right now, this market's strong. There's no reason to be out of the gold market. And here's the indicator I want to present. This looks at the big picture, and what it is the bullish percent index for the gold miners index. And the bullish percent index measures the stocks that are on point and figure buy signals for for the gold miners index. So it's a point and figure. In other words, right now, we got 89.29% of the stocks in the gold miners index that are on point and figure buy signals. So that's a strong showing. But the one I point out here, when it gets up around 95, which is here, and here, and if you look at what happened from there and here, they're all at highs. So you don't want this bullish percent index to have more than really around 90% stocks on buy signals. If you get over 95% buy signals, you're probably looking at some sort of a too much euphoria going on.
Totally.
And that's what that implies. So, if you get up 100%, matter of fact, I talked about Tom about this a year ago. So you get above 95% of stocks on buy signals, that's usually a death wish. So I'm hoping we don't get above where we are right now. So you got 90% of the stocks on buy signals, which is really a strong market, but you don't want any stronger than this. So I'm hoping we stay in this vicinity, and I think we will, because this indicator right here is showing good momentum. So we're not having any short-term weakness.
Sure.
And but if this gets up to 95%, I'll pull back my bullish horns, because you could, because some of these consolidations are pretty severe.
Absolutely.
So,
Tim, thank you for staying on so long. Is that the last chart there?
All right.
Yep. Thank you. We'll see you tomorrow, Tim. Thank you so much.
All right.
Folks, check him out at ord-oracle.com. Get the SPY up 0.72%, composite up 0.91%, Dow Jones Industrial trading up 0.62%. We'll be right back for a short segment right after this break.